Hello, everybody, and welcome to the 84th edition of LM's Weekly Wrap, our weekly program for the market related developments. This was quite a decisive week for the markets because we had the RBI monetary policy meeting, and on expected lines, I think the rate cuts which were expected, but I think RBI kept the rates unchanged. And I think more light will be thrown by this by Jash on this particular topic. And we had a whole host of companies declaring their numbers as we come towards the end of the earnings season. I think it's time to evaluate the hits and misses of this particular earnings season. What is the outlook going forward? In a way, this week was quite tricky from the stock market perspective because we've seen a whole host of sectors behave in a very different manner. Market players in a way were caught unawares in quite a few sectors. So we'll elaborate more on all those aspects of the market. Nonetheless, the stars of this week were the PSU participants, and I think very stellar performance continues as far as the PSU players are concerned. But more from the market, I think we have Jash. Jash, welcome to the show, and kindly take us ahead with respect to the market.
Thank you so much, sir. It's great to be back. I think this week was very volatile. One must say, we've been advising to book profits. I hope you've been booking profits because you're definitely going to get more chances to buy. Because if we go to see today was a good time to buy certain trading positions as well. As far as the market is concerned, we are seeing a very erratic, responses to the results. That's what I would say. Like kind of extreme. Maybe it is maybe 10% up or 10% down. So I think this is a classic bull market scenario where there's extreme movement on both sides, and the correction is also strong over here. Like in bull market there are stronger corrections. But let's see on how the markets go ahead. I'll be throwing some light on the RBI policy meet. So of course the rates are unchanged. Though there was some murmuring that on some kind of timeline on when the rate cut, but of course that is not going to happen because we are going to follow the US markets. As long as the US doesn't cut rates, but that till then we are not going to cut any kind of rates because of course we are going to follow them. A lot of FII flows, inflows and outflows depend on that. So hence that is what it is. And coming to the inflationary front, I think we are quite the commentary is quite stable. The inflation is quite stable since the past few months, and there is nothing out of the ordinary over there. We are moving towards our target, and I think we will remain over there. And I think in another 2 quarters we might see some green shoots for the rate cuts. Apart from that, I think the US markets have been sound. The Fed commentary last week that was given, that has been taken into consideration, and then I think that has become quiet. And coming to the Indian markets, the auto has been a showstopper, and more on other kind of sectors, Nirav sir will take over. Thank you so much.
Thank you, Jash. Yes, I think the rates have been left unchanged. But the concern for the markets is the food inflation. And we've seen food inflation because of there have been sudden and temporary spikes in the prices of food grains, and that's what has bothered the government. Nonetheless, at present things continue to remain under control, but it remains to be seen how the situation gets tackled when there is summer. So this is one aspect. Coming to the different sectors, I think we start off with the auto sector, and as rightly pointed out by Jash, I think the performance of the auto sector was fabulous. It was to sum it up, it was a flawless performance by the auto sector. Now this applies to different aspects. One is whether it is the quarterly results, whether it is the monthly auto sales numbers, or the third were sectoral related announcements. So I think as far as the monthly auto sales numbers were concerned, I think we saw good momentum being maintained by the likes of Maruti and the two-wheeler makers, etc. As far as the results were concerned, I think most of the companies declared a very, very sound set of numbers, whether it was Maruti, whether it was Tata Motors, a very, very stellar set of numbers. As far as the two-wheeler makers are concerned, I think Bajaj Auto continues to do very well. TVS Motor Company continues to do very well, and our LM Weekender stock idea, that is Hero MotoCorp, which it just achieved its target today. This stock was recommended by us at 3,800 levels with a target price of 4,825, and this stock was a big gainer as far as this week is concerned, and I think crossing the 4,900 mark in trade today, as we just discussed at this point in time. So I think auto continues to perform very, very well, and the outlook also looks quite good. We have the smaller players like Force Motors or SML Isuzu, which also continue to perform quite well in trade. We had good numbers from Ashok Leyland as well. So I think auto remains in a good space. When autos do well, generally we see that auto ancillary also tends to improve and tends to show a good performance. There we have a slight divergence in the performance. We've seen the tire makers have been under some sort of pressure because already they were working on a very high base. The high base effect is working against them. So this time around we've seen some correction in the tire makers after the announcement of the results. The battery makers continue to perform well, and the other auto ancillary makers, especially those which are concentrating on EV side of the market, those which are catering to the electric vehicle side of the market, have done exceptionally well in the markets. So I think this is about the auto ancillaries. Next is the banking space. There again we have seen the divergent performances in the banking space. I think the private sector banks continue to struggle in trade, barring today where we saw some pullback in the private sector banks. But I think HDFC Bank, led by HDFC Bank, ICICI Bank, Axis, Kotak Mahindra Bank, they have been under some sort of pressure in the markets. And that is really putting pressure on Bank Nifty, which in turn is putting pressure on the Nifty overall market performance. As far as the PSU banks are concerned, they continue to shine well in the market. I think the PSU banks led by State Bank of India was a big winner in the markets in this particular week. And to sum up, I think PSU stocks, all the PSU stocks like IOC or Coal India or State Bank of India, BPCL, these were big gainers in the market in this particular week. So I think PSU was the flavor of this month. Nonetheless, coming back to PSU banks, they've been in good health. Market anticipation that they will get good treasury gains going forward is also working in favor of the PSU banks. Third is a capital goods makers. I think capital goods makers continue to get the benefits of a very healthy economy, and I think we saw good numbers coming in from Cummins. Cummins are doing very well in trade. Thermax doing very well in trade. And coming to the smaller companies, I think some of the gems which are identified by LM have continued to perform exceptionally well after having gone up 5 to 6 times from the recommendation price. The first in this particular category would be Elecon Engineering. Very, very stellar set of performance from Elecon Engineering. We have Action Construction Equipment, which performed very well. Triveni Turbine, which performed exceptionally well in trade. And today we have Schneider Electric Infrastructure, which has performed very well in trade. These four stocks have performed exceptionally well and have gone places from the time we recommended these stocks. After this we have cement. We had a stellar performances coming in, as we've already pointed out that cost pressures have been easing and the power and fuel costs have been coming down substantially, and this has helped as far as the operating leverage is concerned and the bottom line growth is concerned. So today we saw some very good momentum in the cement counters. We saw stocks like the JK Lakshmi Cement or the likes of the Ramco. We saw the likes of Prism Johnson. We saw ACC. All these stocks have been strong movers in trade today. The commentary from the cement segment continues to be very, very strong, and going forward, the sector is confident that it will be able to contain its costs, and the EBITDA for the entire sector for the cement industry is expected to be in the range of 1100 to 1200 rupees per ton. So I think cement continues to be in a good space on account of these factors. Next, we come to the FMCG sector. This has been the weak link in the market. I think after a slightly poor set of numbers coming in from Nestle and the other Britannia Industries, I think we saw pressure in the FMCG space. And we've also seen some pressure on ITC on account of some news floating around that BAT Industries plans to pare its stake in ITC. So I think the entire FMCG space has been under some sort of pressure on account of these developments. Next, we come to pharma space. Pharma has been doing very well. Our LM Weekender stock idea, Cipla, achieved its target, and we have Dr. Reddy's, which performing quite well, and we have Lupin, which was a star performer in this particular week. It has also performed quite well in trade. So I think pharma also continues to be in a good space. Finally, coming to the railway stocks, I think reality check over there. We have been warning in advance that most of these stocks are no longer in a fundamental category, and most of them have gone into a trading zone, and they are very, very volatile. So it is advisable to keep strict stop losses, moving stop losses as far as these counters are concerned. And today there was disappointment as far as the results of RVNL or the Railtels or etc. are concerned. So reality check for the market, we've seen a healthy correction which has been happening in all these railway related stocks. To a certain extent, the hydro electric makers also have been seeing some correction. Across the board, we have been seeing some correction, which I think is healthy as far as the market is concerned. I think still expect more correction in these PSU counters before they come to reasonable valuations, and at those valuations support, one can think of entering these stocks again. Finally, we have Reliance Industries, which made a market cap, which crossed a market cap of 15 lakh crores, and I think that's I make your pardon, it's 20 lakh crores. And we have the stock which is hovering at 2,920 levels. So I think going quite strong, Reliance Industries. Our expectation is that the stock should go to 3,200 levels very soon. A lot of things to discuss, but I think time constraints will permit us no further. So I hand over to Jash for the closing commentary.
Sir, one before we close it, sir, about railway, is it still advisable to enter at these levels, or we should wait off?
I think it's better to wait because the valuation support is not there as far as the railway stocks are concerned. Most of these stocks look in a very, very volatile zone and a territory. So I think we should wait for still some more healthy correction.
So if we still have it, should we hold it for now?
It's better to book some profit, as we have been saying. Keep booking your profits. And I think better to wait for lower levels to enter, and at this point of time it's advisable to take your profits.
Okay, I think that's some solid tip from our head of research, and tune in next week for some more kind of tips like this. Okay,
Thank you very much. Thank you.